Okay, again. Hi, everyone. It was a vicious day on Wall Street, and I tell you what, I've been warning that something looks really wrong. Sadly, before 2008, I would have gone short this market very heavily here, no doubt about it. But as I said before, in a QE market, you can't trust it. So I don't hate myself for missing this downturn. It's just not a big deal. However, it is possible it does get worse from here. The market sold off today on very heavy volume and broke some major support. The Russell 2000, as you can see, that trend line that I drew, it really needed to hold that support, and with it closing at 1076.31, that's a close below the intraday low of the 10-2 session. So that's a brand new 52-week low, and that's not pretty at all. That's a very ugly chart. Now I want you to look at the moving average convergence divergence on the bottom. You can see going back all the way to 2012, we are very oversold. But if you notice how oversold we are, that's bad. Like, that's really bad to see it this oversold and what we did today if you just see the day before. So what we could do is we could definitely see the market round up here, but to think that the market's going to now rally higher from here, I don't know. I know that we're supposedly going into the most bullish period in a 4-year presidential cycle, an 8-year presidential cycle, and that the bottom doesn't normally happen until about a week and a half from now, and then the uptrend starts until the end of the year. But this doesn't look good. And if I go even longer term, you can see how oversold we look. But it's crazy. And if you go to a weekly, though, you can see if we're comparing it to the 2008 lows or 2011 lows, we have a lot further we can decline before this oscillator sees a low. So I don't know, man. I think that we need to buckle in for a potential big ride to the downside. The NASDAQ also, like I showed you earlier, big volume sell-off. If you look at a weekly, we are nowhere near oversold on the MACD, and it's the same way with stochastics. I should have thrown up those stochastics also with this. My apologies for not doing that. But the New York Stock Exchange on a weekly, you can see we're shooting towards those lows, but still we're nowhere there. But we are oversold. But so we don't buy the market at all until we start to see these things rounding out and then get a follow through day. But right now, I don't know. We've cracked some pretty big support on heavy volume and have some charts breaking down everywhere. And that is why tonight I want to go ahead and add to some hedges, showing you the S&P 500 there and the Dow Jones Industrial Average. What I want to do is add to my SDOW 2%. I know I just got shaken out of this. Once again, I expect that to happen. I just expect that to happen. But we'll re-enter another 2% add to SDOW on the basis that earnings might be bad. Look at Alcoa as we're going into their earnings. That looks to be finding some pretty heavy resistance at the 50-day moving average. Not good. Also, I want to add to my SQQQ hedge. Look at the pocket pivot point signals lately. A flurry of them all in here. So very bullish. And using the TSV, MACD trending higher, opposite of what the NASDAQ is doing. And then also, I didn't know if I wanted to go SOXS. It's already bitten me once. Don't feel stupid for getting bit by it, but darn, wish it would have worked. But here it seems to be a little too extended. In 5 days, it's up 16%. And with like the failure of ALXN, look at it reverse that breakout. CELG reversing its, BIIB reversing it. And based on the way that the XBI looks and the IBB looks, I want to go ahead and add a 2% position in BIS. Like I said, if this was not a QE market, I would swing for the fences here on this one, BIS, and I would probably put 10%, 5 to 10% of my account capital in this one. But not knowing if once this thing starts going, they're going to all of a sudden be like new round of QE, it just messes everything up. So the only time I want to really play a market heavy is on the long side. And right now, that is not going to happen. So after showing you what I'm going to be buying, BIS, adding to SDOW and SQQQ, and not going short any stocks because sadly it doesn't pay. You just can't short, pick shorts like you could be able to. I wanted to go short Voil yesterday. IB did not have shares to borrow. Voil ended up getting shares. It's a pump and up to borrow earlier today, but obviously I'm sleeping because I'm on Maui. Thing dropped 15%. Another interesting short is INFY. That looks like a fun short potentially. CMRX would be one I'd watch intraday for a short signal. And LAKE, after I've been telling everybody in the chat room to watch it intraday for buy signals, I would now start to watch it for short sell signals intraday. But the bottom line is this market looks really rough. I mean, look at DRV. That looks real estate bear. Look at ERY, energy bear. Look at FAZ, financial bear. And then look at UVXY. Look at TVIX. It looks like for the first time we're finally starting to get a little bit of fear showing in the market. But it's only 17. Need to go back to show you where other moments of fear gauges are. Normally around the 20s, sure. Normally around the 30s, yeah. But long-term historically, this gauge can get all the way up to right around, the 40 levels before you actually start seeing a real floor. We're 100% plus away from that area on the VIX. So it's possible that UVXY and TVIX could really start moving here if this market starts selling off. And like I said, there are ugly charts everywhere. Look at CAR, Avis Budget Rental. Look at LYG, Lloyd's Banking Group, over on the other side of the pond. It's just a mess. Look at recent leader like ETE, a recent leader like NTCT. Once Facebook potentially cracks, which is looking like it wants to, if Twitter reverses, and if the All-Star GoPro is actually trying to do a mini higher second leg double top here, yeah, it could get ugly. I don't have very many nice charts. What I want to show you on the long side, two stocks we're interesting. Well, GMCR we're already long, but GMCR is extended here. If you go short term, look at that big move. There's nothing I can do about it. This would have been the entry, and to be honest with you, it would have been risky, lower volume move. What are you going to do? But SEMO made a heavy volume move off the 50-day moving average after raising guidance for its quarter 3 announcement that it's about to make. But SEMO looks good off the 50-day moving average. TSV, MACD turning up. Still, this is too short of a base. And also, if you want to look at this consolidation pattern, the structure of it compared to its previous consolidation patterns on the move up, way more sloppier. So not one I would want to get long, just want to show it up. And VICR coming off the lows. Check this out on MarketSmith. I'm not impressed with the numbers, but still overall a pretty nice chart pattern for a market that was really ugly today. But besides those two stocks, it's ugly. And if you look at the DIA, the QQQ, the SPY, and the IWM, you will notice that volume was above average on all the ETFs, confirming today's move. Tomorrow, we will either need to bounce, or if we continue to sell off, it's possible we're in for a month where we're going to see an October crash. I don't know what's going to happen. It's up in the air, but tomorrow will be a huge tell on how October is going to turn out. Thank you.